Hello, trading friends, and welcome back to Forex Focus, brought to you by IG. Huge story for you here today on the Mexican peso. It's been on a historic run recently, getting to its strongest point since 2015, and there's a lot of ideas behind this run that's hopefully going to get you up to speed and interested in watching. I know I'm interested in watching where this Mexican peso is going to go from here. Because like I say, it's been a hell of a run. And let's bring up the price action and take a look. Because my friends, when I first saw this from our research team, I thought that this was a daily chart. And I was like, oh, that's pretty good, handful of months there. This is a monthly chart over the course of the last few years, showing that this dollar has gone from 24 all the way below 17. And just for context, for all of you non-Forex traders out there, that's going from needing 24 pesos to get you $1 to now only needing 17 to get you that same $1, which is to say huge strength from this Mexican peso. It's very rare that you see a currency, and this isn't necessarily a major currency pair, but it's on that next level of I don't know if you want to call it emerging or what, but a pretty high volume and watched currency pair here, with the obvious ties in North America, and to go from above 24 to below 17. I mean, that's just a massive move, and there's a lot of stuff at play. And so let's dissect this and start with the more traditional route. Whenever you're talking Forex, you're usually going to be talking interest rates as well. And there's a couple of things to dissect here. One, almost the exact same trajectory of interest rates here, both in the US and Mexico. So you might call it a wash over the last couple of years. And by that, I mean, usually a region with strengthening interest rates might see its currency get an influx of demand for people to invest at that higher interest rate. And so the idea might be, if the U.S. hiked interest rates from 0 to 5%, like they did in the last couple of years here, and Mexico was at 0% and they stayed at 0%, well, then people with Mexican pesos might convert those for U.S. dollars to invest in treasuries at 5%, as opposed to keeping their pesos in Mexico invested at near 0%. Now, like I say, it's been a bit of a wash as they've both been hiking the last couple of years. But if you do dive a little bit deeper, you'll see that the U.S. has gone from 0% to 5.5%, and Mexico, the Bank of Mexico, the central bank, their equivalent of the Fed, has gone from 4% to 11%, and so has hiked essentially 6% in the same time that the U.S. has hiked 5.5%. So a little bit of strength there in just that interest rate piece, but also you're seeing huge macroeconomic developments in the way the Mexican economy has shifted in recent years, and a lot of it is coming from shifts in the U.S. economy. Here you have the U.S. GDP growth rate, and it's been pretty consistently strong over the last couple of years, even with those hiked interest rates, which has been, not the case for a lot of European countries or a lot of Asian countries, as globally interest rates have risen in the last couple of years, and a lot of those regions have seen kind of diminishing GDP growth rates, which you might expect. The U.S. has seen consistently high GDP growth rates, and a lot of that growth has had to do with the fact that they've been utilizing this trend of nearshoring, which leverages regions closer to the consumers, whereby U.S. businesses will use maybe a Mexico or a country in Central or South America that's geographically closer than, say, China, to manufacture goods at a cheaper or more competitive rate than doing it here in the U.S. And so essentially taking the idea of offshoring and bringing it in a little bit closer. And so when you do something like that, the U.S. has seen growth from this idea in recent years, but also it's been lifting Mexico's economy as well, right? Because they've been seeing all the benefits that China or some Asian economies saw maybe 5-10 years ago before this nearshoring effect has kicked in. Also lifting this Mexican peso has been the U.S. employment. And again, you might say, man, Frank, this sounds like a lot of U.S. strength, but it's a matter of, yes, we're seeing good U.S. strength, but Mexico is just seeing a little bit more lift relative to its currency in circulation and population and everything else. And so another part of this trend, U.S. employment's been strong, right? If you've been watching non-farm payrolls and the wage growth and all these different metrics, again, even as recently as the last couple of months where you're seeing the UK and European regions and Asian regions and Australia not necessarily, fall or see negative employment growth, but they're not seeing as much employment growth as maybe 1 or 2 years ago. The U.S. has been consistently high, and a big part of this has been the influx of Mexican migrants in recent years. And Mexico is also the second highest receiver of what's called remittances in the world. And just a fun fact, they're second to India. And what remittances are is essentially you have migrants from one country to another country, like in this example, from Mexico to the U.S., being a part of their employment, part of their economy, getting U.S. dollars and sending them back to family members or whoever in their country that they're emigrating from. And so now you have essentially this growing workforce in the U.S., of which Mexican migrants are a big portion of, boosting, that GDP, boosting this employment. And they're essentially natural buyers of Mexican pesos, right? Because to send that money back, they're converting their U.S. dollars into Mexican pesos at the second highest rate globally. And so a couple of different trends that kind of show, both U.S. and Mexican economic strength, but the Mexican peso is seeing the benefits of. And now I want to take a look at even more data in the long term, going back the last decade to see, what is feasible from this dollar peso pair. And this market has been as low as around 13 and has been as high as 24, which we took a look at earlier. And those are heights from the last decade, and they were right around the start of that pandemic where there was a flight to quality in the US dollar for this pair in particular. And now, in the grand scheme of things, kind of middle of the range. This is a market that, has shown in recent years can absolutely trade in the 20 handle. But also you go back to prior to 2015, 2016, has shown that it can trade below 15. And so room on either side of this market, if you think the trend is going to continue with this peso strength and what we've been seeing in the data and everything else, then there's room to the downside for this dollar peso. And if you think that, maybe China starts to pick up again or these different pieces start to reverse, then obviously given recent years, there's plenty of upside in this dollar versus the peso. But either way, really interesting story in the U.S.-Mexican economy relations, and huge move for this Mexican peso, one of the strongest of these mid to major currencies in the last couple of years.